The demand for it keeps growing and keeps growing, yet the price has not manifested in any shape or form to meet that reality.
I have the distinct honor to have Andrew Schectman with us here from Miles Franklin, here for the first time on the channel. And Andy has a wealth of knowledge. He's been in the precious metals markets for a long time, many years, many decades. We want to pick his brain a little bit about the precious metals space, gold and especially silver. So Andy, welcome to the show.
Well, thanks for having me. I appreciate it very much. I've been following you and glad to have the opportunity to chat with you now.
There's a lot going on in the markets, and silver especially has been pretty volatile. I think that's a pretty safe assumption we can say. And it's floated all over the place. We have seen a couple of times where it's kind of picked up a little bit, getting above $24 an ounce, and many of us feel it should be a lot higher than that. And something keeps kind of hitting it back down. And there's a lot of people can have differing opinions as to what's causing that. So let's talk a little bit about the precious metals markets as they stand now, and especially silver. We'll start with silver and what's going on with the silver market right now.
Well, one of the things that I've noticed over the last several years has been a concerted effort to drain, if you will, the epicenters or the large caches, if you will, of silver around the globe. In 2020, we noticed it started with the COMEX. We saw the rise of a third group of traders on the Commitment of Traders report, which is called the Others. And these folks are believed to be sovereign wealth funds and family offices. And we saw them take more silver off of the exchange than we would typically see in a decade. Subsequently to that, we've seen the rise of something called exchange for physical, where contracts will be written on the COMEX and then exchanged for physical delivery off the London Metals Exchange. We've seen the largest one-day or one-week deliveries off the Shanghai Metals Exchange recently in silver. We've seen lots of evidence pointing to draining of silver, backdooring it, if you will, out of the ETFs, SLV in particular, by the authorized participants. It's through a form or through something called share redemption, and it's a much more opaque way for these companies, these banks, to take possession of silver and really kind of shroud it in mystery. Who's taking them? How much was taken off? And we're seeing recently BlackRock, who is one of the administrators of SLV, actually take 7.8 million ounces off the market from PSLV. Actually took a redemption delivery of 7.8 million ounces recently last week from PSLV, which is the Sprott Physical Silver Trust. We see guys like Ted Butler talk about shortages all the time in the industrial size bars, and yet it hasn't translated over the last couple of months to any type of shortages in the retail market. In fact, to the contrary, we've seen the best pricing we've seen in quite some time in terms of premium and availability. And it's very confusing to a lot of people, myself included, how we are seeing the most sophisticated traders in the world make a concerted effort to taking possession of metal. I mean, look at India, imported 304 million ounces last year. And that's more than the entire COMEX universe has, of which we're talking eligible and registered. The registered category, if we, and again, a lot of people don't want to make a big deal of the COMEX numbers, and I'm kind of one of them, but it's worth noting that the COMEX has 40 million ounces or thereabouts in the registered category, which are the bars that are available for immediate demand or delivery based upon the contracts that were written against it. But those contracts, there's 1,700% more paper contracts currently than there are bars backing it. That's a term called rehypothecation, where there's a whole lot more paper backing the bars that could stand for delivery, where 1 out of 17 gets delivery and the rest get a paper settlement if it came down to that. Now, it never has come down to that. But we are living at a period of time where it doesn't make sense that silver hasn't performed, that it's trading at below half of its 1980 peak, that it is an asset that is massively needed in everything from green and digital applications. A tremendous article written lately by the Pickaxe. I find it to be very interesting, speaking about the military-industrial complex and the amount of silver needed in all the high-tech weaponry, such as 500 ounces of silver in the tip of a Tomahawk cruise missile, or all the way through the entire military-industrial gambit, from aerospace to space to submarines to all of this high-tech weaponry that definitely needs silver. And so in an environment where the needs and the applications on an industrial side for silver and green and digital and military applications seems to be growing, we find in information from guys like Keith Neumeyer, a friend of mine who was CEO of First Majestic, who will tell you that it is coming out of the ground right now at a 7-to-1 ratio to gold. In other words, it's depleting in nature because for 5,000 years that number was 16-to-1. And at a 7-to-1 geologic ratio or mining ratio, factored against an 85-to-1 price ratio in an environment where there is massive expansion in demand and an asset that has experienced a renaissance in investment demand, in monetary demand over the past really 3 years, where the majority of the business we've done as a company each year, the last three being bigger than the previous, has been mostly in silver. An asset that has demanded this much, but has been over halved in terms of its geologic footprint. It's very interesting. It makes you wonder just how real are the numbers that we see coming out of the COMEX? How real are these numbers that we see where silver, by all metrics, seems to be getting harder and harder and harder to find, whether it be geologically or even on the industrial side, the big 1,000-ounce bars, in an environment where the demand for it keeps growing and keeps growing, yet the price has not manifested in any shape or form to meet that reality. So it's a very unusual time. It's a very confusing time. But I will simply say this to you. There are very few investments I have ever seen in my life that, certainly in 33 years of running a precious metals company, where your asset that you're buying is decreasing in supply and increasing in demand exponentially, it would seem, and at the same time, an asset that has duality in demand. It's not just one area that we're seeing demand in terms of monetary investment, as an example, but as I mentioned, you have military, you have industrial and green and digital, and these are areas that are expanding. And if anything, when you look at the auto manufacturers who are trying to make, electric-powered vehicles, or this drive to green energy, the need for silver is not going away. In fact, it's becoming harder and harder to find, according to the geologic ratio, where it's found in nature in a form called epithermal, very near the surface, like your skin is epidermis. Silver is found in nature, epithermal, right near the surface. So the big deposits were found years ago, to the point where of roughly 1 billion ounces mined last year, only 350 million or thereabouts, 35%, came from companies like First Majestic, who mine silver. The majority of all the silver that came to market last year came from recycling or byproduct mining of other elements altogether, where they just stumble across some silver. Hey, here's some silver. And it's an asset that is, by all measurements, becoming harder to find, yet is encompassing more and more and broader uses. So a very interesting time, and you put it together with down here at the retail level, where the last 3 years getting product at a reasonable price at a reasonable time frame was the most difficult thing we faced. And now all of a sudden, over the last 3 months, it's like we're in the eye of the hurricane. We were already walloped by the front end of the storm, and it's quiet right now, and premiums are low, and availability is strong, and yet the trailing edge of the storm hasn't even hit us yet. So it's a weird time for sure, a confusing time for sure, but judging by the movement of the largest traders on the planet, the central banks, the commercial banks, it to me hasn't waned one bit in terms of demand, and this represents to me a subsidy of generational proportions. So crazy time, man, but it's a good time for those who are adding silver to their portfolio in terms of price and availability and time in which it takes to get it in your possession. All positives.
There's two words that stick out from what you just said: weird and confusing. And I think that sums it up greatly because, there's a lot of confusion. Just I've noticed for as long as I have been looking into it, which I don't have nearly the knowledge that you have, but, the Commitment of Traders report, confusing. And there's a lot of things that even before the pandemic, there was a lot of things that were, could be interpreted in a bunch of different ways. And I know one thing I try to do on my channel is try to bring balance to that. And so I appreciate your forthcoming with some of this, because I think even the most expert among us kind of scratching our head on some of this stuff. So there's that. And then you also have things that are happening with the silver supply. I did a video recently based off of a coin shop who started the hashtag silver surplus. We're now seem to be in a silver surplus now. Where's all the silver coming from? And I'm theorizing that perhaps maybe since 1900, if you look at the amount of silver mining that's happened since 1900, and gold to some extent as well, it's been exponential from any time in history beforehand. From 1900 to now, there's been more silver mining than there ever has been in the history of the world. With technology, a lot of the processes that are used to be able to find silver. However, as you've noted, primary silver mining, which means that 50% or more of the mining operation is done with silver. So in other words, a primary silver miner, if they do 51% silver, they're considered a primary silver mining. But they're few and far between. Keith Neumeyer, is a perfect example of that. Most of the silver that's mined now is mined as a byproduct of other metals, like
Correct.
lead, tin, and zinc, as you know. So there's a lot of recycling going on. There was a company called Ohio Precious Metals that is no longer around anymore, but they were famous for that. That kind of brought it to the mainstream for the stacking community, and this thing was silver. And so what happened is people are just selling a lot of silver, especially with inflation now that's happening. I think that's what we're seeing is people just selling a lot of silver. Maybe even a lot of these new folks that started stacking within the last 3 years during the silver squeeze movement and the like. So I'm wondering if that's a part of it. The other thing I want to comment on what you said about the mining ratio, kind of where it was before. Because I know the one thing I always say is that the mining ratio does not equate to where the price should be or where the price is, because of supply and demand. Rarity does not necessarily mean that something is going to be expensive. I came out with a silver round, a Salivate Metal silver round that has a mintage of 175. Some people would look at it as just a piece of junk. It's maybe worth spot. Some people wouldn't even give spot for it because it has a picture of a kitty on it. So it's so rarity does not necessarily mean that it will equate with the supply or with the price, what the price should be. However, the Silver Institute has been predicting, we've seen a deficit in silver last year in 2022. But this year, they had projected for 2023 to see a silver deficit again, maybe even more so. And it was an understandable prediction. Metals Focus is the group that does the work for the Silver Institute. But they were wrong. Apparently, when China reopened, they had some problems. And that's where a lot of silver is processed for the microchips, for electronic devices. So the supply chains have not fully come back together again. And I think that's a part of it too. There's so many different aspects of the silver market. Silver market's a very tiny market, but it's a very complex market. And a lot of it has to do with that duality that you spoke of as well too.